Good morning. It's the Video CPA. It's good to be back with you. Hope you had a good Christmas and a Happy New Year. We're into 2022 right now, and so today we're talking about taxation of a crypto miner. If you're not familiar with crypto mining, this video will make you a little bit more familiar. Crypto mining is being picked up by a lot of people, especially on a small home business, and that's kind of what we're going to talk about today. There are a lot of very big boys in this market who have big crypto mining farms, but we're going to talk about the guys that are doing it in small offices or out of their home today, and how they're taxed. So you can see here we talk about what is crypto mining. We're going to talk about the elements of revenue and expense for a crypto miner, a small one. And then the elements of taxation that you need to look at as well. So we do our affiliates with some marketers, and so if you buy from some of those affiliates, we do get a percentage of that. We get a commission. And this is our educational disclaimer. So let's talk about crypto mining. Okay, so basically you've got a blockchain out there, and that blockchain, in order to have miners on it, is usually a proof of work blockchain. And that means that blockchain, the transactions that go into that blockchain, and every transaction that is done with the cryptocurrency that has a proof of work type blockchain is in the blockchain. And so that transaction needs to be verified. And this is a peer-to-peer system. You've got to remember, Bitcoin was set up on a peer-to-peer type transaction system where there's no middleman that makes sure everything is right. And so it's got to be made right in the blockchain. And so it's verified by mining, by crypto miners. So they're not really people with picks and shovels, but they're people with high-power computers, and so they will verify that the cryptocurrency transaction is accurate, that both parties are being treated fairly, and then that information will be added to a block on the blockchain. And in return, they receive a reward for their computational effort, and that reward usually is a little bit of cryptocurrency. So let's talk about the types of miners, and when we're talking about this, we're talking about the machines right now that miners use. Okay, used to be in the early days of crypto mining when Bitcoin first came out that you could use your home computer to mine, and that would be what's called CPU mining. That's no longer the case. CPU mining just isn't very profitable anymore because the home computers, I mean, it could be, but if you've got a really souped up home computer, it might work. But for the most part, home computers and CPU miners don't have the computing power today to do what is required. So then you've got the GPU miners, and they mine mainly Ethereum coins and Ethereum-based coins. These miners have got graphics cards in them, and the profitability of the mining machine really depends on the quality of the graphics card it's got in it. So these are miners that can be built fairly easily, and so you'll see on YouTube a lot of people have built these miners. They put one graphics card in and they sell it. They want to sell it, and then you have to go ahead and buy the additional graphics card. But it's a mining rig that may carry anywhere from 4 to 8 graphics cards. And the graphics cards, if it's a good graphics card, can run $2,000 a piece. So it's they can get fairly expensive if it's a top of the line GPU miner. All right, and then you've got what's called the ASIC miners, and the ASIC miners are built for a specific purpose. Most of them are built to mine Bitcoin. Some are built, there's not very many that are built to mine Ethereum because the GPU miners are usually in that space, but there are a few that mine Ethereum, and some of them mine specialty coins like Cadena or Digibyte, other coins like that, and but primarily they're built to mine Bitcoin. And so a lot of ASIC miners out there today, they're very high powered. They're very expensive. If you want the top of the line one these days, you're going to pay $10,000 to $15,000, $16,000 for it, and possibly even more. So, but their profitability is pretty good too. And so you can look at these. You can look at several mining sites and see what the profitability of these miners might be as you look at possibly buying a miner, or your client is looking at getting a miner. And so What to Mine is a good site. What to Mine will tell you the profitability on an ASIC miner. It will also tell you the estimated profitability on a GPU miner, but it does it by graphics card, okay, by GPU. So if you look at it, you may have a graphics card from NVIDIA, a 3090 type graphics card that is making $7 a day. And so if you've got 8 of those, you multiply that times 7, and that's what your profitability would be, minus your electrical costs and any other expenses, but on a daily basis. So What to Mine has both the GPU mining profitability and the ASIC mining profitability. Mining Watchdog, if I remember right, it's just the ASIC profitability on ASIC miners. And then you've got ASIC miner value, which is also just ASIC. And if you look at these, they're fairly close. All three of them are fairly close. If one says this miner is going to do $20 a day, the other two will have that pretty close. It is going to be 20 or 19 or 23 or something like that. But they are generally pretty close, and they use a electricity rate generally of like 10%, 10 cents 10 cents for the computations. So you may pay less than that a kilowatt, or you may pay more. So that's just a little bit of information about miners and mining machines. So miners receive cryptocurrency for their mining efforts. So if you're mining Bitcoin, you're probably going to get paid in Bitcoin. If you're mining Kadena, for example, you're going to get paid in Kadena. So generally, you're paid in the same coin or the token that you're mining. And so if you're mining a coin out there that you're not particularly impressed with, but you're making quite a bit of money on that coin, you probably need to convert that, sell that coin and get some other cryptocurrency or get cash for it on a fairly often basis. So it depends on the quality of the coin that you're mining, and sometimes you'll look at it and decide which coin you want to mine as you go into it, and that might be a very profitable coin. Bitcoin, for example, is not as profitable as some other coins, but Bitcoin is a very good, stable coin. So and when I say stable, it does the price of it does vary a great deal. But so you need to pick a coin that you think is going to be around for a while anyway, or you need to, if you're mining a coin that you're not sure of, you need to transfer it into some other coin on a frequent basis. Now, from a tax standpoint, the taxable value of the cryptocurrency that you receive then for mining is the fair market value at the time received, okay? And so that is going to present some pretty good tax problems. And so when we get toward the end of this video, I'll talk a little bit about some of those problems. Mining revenue is business income. This is a business that's recognized at ordinary income rates and subject to self-employment tax. But once you recognize that income for tax purposes, you have a basis in it. And so when you turn around and sell your Bitcoin or your Kadena or whatever the coin might be or the token might be, you've got a basis. And so when that is sold, it's a capital gain or loss. And that could be for you as an individual. If you've got a corporation and you're doing this within a corporation, it would be for the corporation. But so then in that case, you're subject to capital gain and loss rules. But that basis has to be tracked, and so that presents some pretty good accounting problems for us in this area. So this isn't the easiest thing to do your accounting on, and I've talked about cryptocurrency tax software a little bit, and I'll talk about that in a little bit more. So the revenue part of it is easy enough, other than the fact that you have to know what the fair market value was on the date you received that revenue, and certainly when you can turn around and sell those things for capital gain or loss, what the basis is of it and the fair market value on that date. All right, so some of the expenses that a small business miner may have are, one is going to be electricity. These things, most of these machines now will run on a 240 type plug. Some of them still run on 120, but most of them run on 240. And some of them are pretty efficient from an electricity standpoint. Others aren't, okay? So electricity is a big thing. And each of those sites that I just told you about, What to Mine and Mining Watchdog and ASIC Value Miner, they will have an estimate for electricity in there and then an estimate for the profitability after electricity. So you need to compare your electrical costs to what they're using in the, and like I say, they usually use 10 cents, but to see what your profitability might be. But electricity is probably the biggest expense that you're going to have. So if you're doing your own tax return, you need to make sure that you get the electricity in there. And if you're running it out of your house, well then you're going to have to allocate your electrical bill on a justifiable means to your personal part of the home and to the miner. And that's most easily done by knowing what your history of your electricity before you got the mining machines, and then knowing what it is afterwards. And so you need to keep that kind of data, okay? Now, you also might have to have some repairs to your house, some maintenance or something like that, to get these things working. Because like I say, most people, these things run on 240 for the most part. If you buy a new one, they're running on 240. There's not too many that are profitable that running on 110 or 120 anymore. But so you might have an electrician come in and run a 240 line for you, and that could cost $1,000 to $2,000, and so that fits under the ideas of under an expense for tax purposes. So you could expense that, and so you have to keep track of that kind of thing. So that's a possible expense, and that's hopefully a one-time expense. Depreciation. These machines are not cheap. If you buy a good machine, an ASIC machine, like I say, you may be paying $10,000 to $15,000. Some of them are $50,000. So, and you may have more than one. A good GPU machine may cost $10,000 or more as well. So, those things can be expensed right off the bat if you want, or they are depreciated. But either way, if they're expensed, they're still taken as depreciation type costs. Okay, you may have to have a machine repair on these type of things. They may need repaired once in a while. So you might want an office in the home. If you've got machines in there and it's dedicated to just those machines, and your computer that controls those machines, you may have an office in the home. Or if you're renting your house, you may have to allocate some of the rent to it. Or if certainly if it's a mortgage, you'd have interest and taxes as part of that office in the home. Now the other thing is these things tend to run hot. They need to be cooled, and so you may have to have some air conditioning expense. You may have to have a fan or something like that. So you may have some cooling expenses there. Now, once again, I'm talking about smaller mining outfits here. I mean, if you're a big mining outfit, you probably have got hundreds of mining machines in a big warehouse, and those expenses are going to be much different. But there's not a lot of expenses associated with this. In fact, if you look at your investment, you invest $10,000 on this on a machine, and you say you get $450, $500 back a month on it net. It's paying for itself pretty quick, and you've got a pretty good return on your investment. So much better than sticking it in the bank, that's for sure. Okay, let's look at the elements of taxation. Basically, you've got revenue and expense. Revenue minus expense is going to be your net profit. But you've also got self-employment tax. If you're a Schedule C type taxpayer, sole proprietorship, you're going to have self-employment tax on this. As long as you're making money. And if you're a corporation, you won't have self-employment tax, but you may have FICA and Medicare if you're paying yourself a wage, and that would be an S corp or a C corp, and certainly a partnership. You got self-employment tax. So you should be able to get the qualified business income deduction on it. And so let's talk about cryptocurrency tax software real quick, because that's very important, because as I mentioned, you're going to have to track the basis of all these things. I mean, when you receive the cryptocurrency, when you sell the cryptocurrency, you're going to have to track that basis. And that's going to be done through cryptocurrency tax software, because you're not going to be able to do it yourself unless you want a full-time job. So the cryptocurrency tax software, the problem with it is, I mean, if you're also investing in cryptocurrency just as an investor, and you're mining cryptocurrency tax software is not going to know the difference. And so you're going to have to get your cryptocurrency tax software, but you're almost going to have to keep another wallet and do your cryptocurrency tax software sales maybe on a different exchange, so that you can keep those separate. Or you're going to have a corporation and buy a completely different set of cryptocurrency tax software, a different just a different version of cryptocurrency tax software that you can do just for your mining business, because those need to be kept separate, because you've got ordinary income from your business, and then you've got capital gain income from that business, and that's going to be different from the capital gain income that you've got from just your investing. So cryptocurrency tax software, I can't not mention enough how needed that is going to be. But at the same time, it's not going to be able to differentiate between those two types of income unless you keep it separately through a different exchange, or through a different program, or through a different wallet. You're just going to have to be very careful right there. Anyway, very interesting type of business here. It's a new business. It's been, cryptocurrency has been around since 2014. Mining's been around, but there's a lot more to mine these days than it's just Bitcoin. And so a lot more machines out there, a lot more miners out there. And so you're going to, if you're a miner, you're going to have to worry about this kind of stuff. If you're a CPA, you're going to have to worry about having clients that are miners. And so anyway, it's going to be more complicated. So thank you for watching. I appreciate you tuning in. And if you haven't subscribed, hit the subscribe button. If you like this video, hit the like button. And thank you. I'll see you again.